Good day, fellow investors. I just read this article on Bloomberg asking whether the ECB should do more to revive European economy. And the thing is, Europe really needs revival because if you measure in US dollars, which is the global currency, you see that France is just a little bit up over 15 years, Italian economy is down, Spanish economy down over 15 years. That's a very long term to be down. And now I want to discuss this article, the key points there on whether the role of central banks is that powerful to revive an economy. For those who don't know me, I'm a European value investor. That's why I look at Europe, but I try to invest globally to get more tailwinds rather than headwinds. Even if there are also tailwinds from Europe, in Europe, if you know how to get those. So the article discusses Mario Draghi, whatever it takes, and how that is now over, and the higher interest rates led manufacturing, Germany, France, to decline over the past 2 years. The euro is weakening, that should be better for exports, but inflation is also pushing on imports, labor costs are going higher, and Europe is less competitive. And now they are discussing how there is urgency in the situation with 4 interest rates cuts since June, but the heavy artillery remains firmly in their lockbox in the ECB language. And then European geopolitical relevance is at stake, third wheel, but that's okay. Since 2019, gross domestic product for Europe is up 2.5% compared to 7.9% in the US. And then we can discuss that, but their question is, have rates been too high for too long? And we'll later connect that also to inflation that is ticking up again, which is a big concern because it impacts interest rates directly. Overall, the message should be that it's time for Lagarde and the ECB to take a more active leadership role. And before continuing, let me know if you want me to discuss more of these topics when it comes to this macro look at things. And to continue on today's topic, what's the role of central banks? Price stability and full employment. That's the maximum, even if some argue that any kind of central bank intervention is already counterproductive for that in the long term. What you gain now, you pay later. So, can a central bank at all revive an economy? Because if we look at what their target is to control inflation at 2%, control markets, that's also what is expected now. To push stocks higher, the ECB will buy bonds directly on the market as it has been in the 2010s. Now they are also expected to revive economies. They are expected to prevent recessions. We haven't seen a real recession in the US since 2009, in Europe since 2012. So now also that is expected from central banks. Make things better through financial engineering, monetary policy, free modern monetary theory. And when I look at this, it's miracle working, at least. The big question is, what is the role of central bank? Can the central bank solve these issues? Because people think that central bank can solve this manufacturing slump. No, it is about the competitive advantages of European industry. What has been the key competitive advantage globally for the European manufacturing industry over the last 15 years? This has been the one and only competitive advantage. 0 interest rates for a decade. If you look at the bond, Mercedes-Benz 2019 to 2030, that's 11 years, issued at 0.75% coupon. That is, I repeat, free money. And then you also see this in the United States. They borrow free money in Europe and then sell their cars, competing to Tesla, 5% borrowing costs back then, with 0 interest rates. The key advantage that European companies had, and then they do crazy things like acquire Monsanto. Yes, you can do that because the interest rate cost of money is free. Zero rates means no free market, leads to moral hazard. And moral hazard is something that refers to the risks that someone or something becomes more inclined to take more risk because they have reason to believe that an insurer, central bank, will cover the costs of any damages. This is moral hazard. Even Tesla was helped by governments also in Europe, but the focus with Tesla, competitive advantages, is always on making more and more affordable cars. European companies, you don't hear them speak about cutting costs, because if they cut costs, then immediately the unions will revolt, Volkswagen, things like that. So when it comes to no market rate, wrong focus, easy hanging fruit, let's go acquire companies because we can borrow for free, in my world, that's called communism. And just an example, I was born in Yugoslavia, in a communist country, and my grandfather was a financial director of a textile production company. Due to some agreement, the same company was built in Italy, Treviso, and the same company was built in now Croatia. In Yugoslavia, the output was 1 with 430 employees. In Italy, the output was 2x with 127 employees. That is communism versus capitalism. Today's world leads more towards socialism and communism because when you rig market rates, as central banks have been doing, you rig the only essential free market, free everything, free capitalism tool, and that is market rates. That has been rigged for the last 15 years, and now there is a problem, because if you push rates lower, inflation goes higher, but if you push rates higher, there is a manufacturing slump. And everyone wants ECB, Fed to do more to lower rates, but that doesn't work that way. And despite zero interest rates, economies did bad in Europe, in the US, as we already discussed. Only Germany went up, but then again, free debt better than, let's say, France. A lot of mumbo-jumbo selling cars to Italy at zero rates, so it's all connected in Europe. But the key here is that, okay, ECB knows that monetary policy can do everything, is true, but Bloomberg says short-sighted given the huge investment needs in technology, defense, and climate over the next decade. I thought that investments are led by created future profits in a free market. No, government investments, government-backed, low interest rates. I was born in communism, I know what it is. Am I the only crazy one that's saying it? Used to be called communism, now they call it whatever, modern monetary deficits. However, if I look at free markets, if you want to revive the economy, you can lower taxes. If I compare European taxes, American taxes over the last 60 years, of course, all the top greatest companies are incorporated in the US. Of course, you cannot now change taxes. The path has already been selected. It is what it is. And I don't think the ECB can take a more active leadership role also because of this. As I read the news a little bit, inflation is now 4% in the Netherlands, and Lagarde woke up and said, "Putain, appelez Mario, appelez Mario." Because we have to also think global versus local. United States dollar was, €1 was 157, now it is 108. This was when everyone was concerned about the euro, then things went well for 5-6 years, but since then, ouch, not so good. And this trend, I think, is clear. Let's do whatever it takes. Boom. There is the loss of confidence in the euro. And as I said, inflation 4.1% in December. So the euro and Europe is stuck between a rock and a hard place. What is the solution? Well, you can try with financial engineering, but if you get inflation, that's the end of modern monetary theory. The soon you cannot lower rates, rig rates at your will, that's the end, my friend. And if I look at Ray Dalio's The Powers and Prospects of Eurozone, very clearly, detailedly analyzed, if you look at the place of Europe, third among major countries, okay, US, China, but in a gradual decline, although over the last 3 years the trajectory has been flat, and now we are again declining. And the big cycles look somewhat unfavorable, and projected growth, real growth, over the next 10 years is just 0.3% per year. 0.3. And that's positive, because if you look at countries there, reality is negative out there. Now, what's my opinion? It is what it is. We cannot make miracles, the ECB cannot make miracles. It has come to a limit because we have now inflation to consider. And inflation is global. You can move it up till a point locally, but if emerging markets, 5 billion people, start creating more demand, USA, Europe is stuck between a hard place and a rock, right? So what to do? The solution is we cannot save Europe. It will be what it will be. Quality of life will likely continue if we don't make crazy things. Will be better and better, nothing wrong. Okay, it will never get back to being the leader in the world like it was 150 years ago. But there is no individual moral hazard if you take advantage of the situation. Free money, still free money, they might print more, inflation, owning assets. So we are already mostly long Europe. Then you must think your job, your security, your pension, your government benefits, whatever. So you can think, okay, how can I diversify it by being long globally the factors that are also weighing on the costs, on inflation in Europe? Those are tailwinds. And as you are already long the headwinds in Europe, you might want to think about global diversification. Yes, the euro is down, it costs more, but over the long term, investing in good businesses at fair prices should do okay. And given the populism attitude in Europe, I think they will print more. That's appellate Draghi, call Draghi, we will do whatever it takes just to push the can down the road. And despite the huge mumbo-jumbo printing, the economies have been flat for the last 10-15 years. The competitive advantage might be gone if there is inflation and zero interest rates or hyperinflation or whatever for companies. They have been enjoying 10-15 years of look how good we are with free money. Everyone is good with free money. So think about how to take advantage of perhaps cheap European companies that operate globally. You can also check my research platform. I'm mostly invested in European companies, hedging whatever happens next. Thanks for watching. Europe will be okay, I hope. Life will be good. It is just that it is what it is when you are third in the world.